Phil Soper here with a brief look at what's happening in the real estate market. Coming to you from an unusual and exotic place today, Northeast Colombia in South America, where the famous Ride for Shelter fundraiser is underway. You can check out more of how we're supporting the Roll of Page Shelter Foundation in my earlier post. So the Bank of Canada cuts rates again. The long-awaited march to more affordable borrowing is truly underway. We're down 50 basis points, or half a percentage point now from that peak, and that's significant. That's two in a row, June and July. Cue the marching bands. Those with variable rate mortgages will see their payments drop immediately, or they will see more of their payment go directly to paying down principal, depending on the kind of mortgage you have. Why did the bank cut rates? Well, the economy is slowing. As expected, unemployment has edged up a little bit, though not dramatically. Most people continue to keep their jobs, and they continue to get raises, albeit lower raises than they were getting previously. The broad real estate market is slow, and importantly, inflation continues to drift lower. Now, notice I said, or importantly, I said slow, not shrink. Economic shrinking is a recession. Most economists would agree that we avoided a recession in this post-pandemic hangover era, which is obviously a good thing. Importantly, the value of people's homes have hung in there in 2024. The recently released Royal LePage House Price Survey showed that homes in Canada were up 1.9% in the second quarter compared to the previous year, and up 1.5% compared to the first 3 months of the year. That's not much, but it is up. So where are interest rates and the housing market headed in the second half of 2024? Well, down and up. Interest rates down and housing prices up. How much will rates fall? If I was a betting person, I'd say 50 basis points, or another 25 basis point, quarter point cuts. The Bank of Canada, Mr. Macklin, went as far as to say last week when rates were cut that there is sustained evidence that inflation would continue to ease and that we could reasonably expect further rate cuts. Well, that's good news. That inflation has been tamed, if you will. And how will those Canadians sitting on the fences who want to buy a home but have been either unable to or didn't have the confidence to re-enter the market, how will they react? Well, we did research on this earlier in the year, and it indicated that 51% of those families would re-enter the market when rates began to fall, but not immediately. Only 20% of that number, of the 51%, would enter with a small 25 basis point cut. That's what we saw in June. But that number leaps to 35%, or over a third of that number, when we enter that range of a half point to a full point cut, and we are there. So I would fully expect more people in market in the second half of the year, the number of transactions to climb, and of course, upward pressure on home prices from the below normal increases we've seen in the first half of the year. Hope this has been helpful.